Thank you. I'm happy to be here today to discuss a topic that I know is dear to so many people. I always say that a business without cash is like a nation without a ruler. I think you can imagine how chaotic that could be. Yeah, in Africa we have various rulers, but yeah, at times we complain, but they do a great job and they help us put the country in order. So today we are going to talk about cash flow for MSMEs. And I think if you are in employment, it's also good to think about and reflect on what we are going to say, because in one way or the other, it also affects you as a professional, as somebody who is employed. But if you are in business, this will be more relevant. The other thing is what I'm going to present is more geared towards a product business, but we are going to also see how this applies to businesses that are in services, like the consultants, like people who are in tourism and the rest. So just allow me to share my screen. The topic of discussion today, cash flow management for MSMEs. And our agenda will be on what we want to understand what cash flow is, importance of planning your cash flow, managing and avoiding cash flow pitfalls, and planning your cash flow. How can you then plan? How can you forecast so that you are able to avoid the pitfalls? If you look at this bucket, you can see an inlet and you can also see outlets. Inlet is one and outlets are several. And there are holes that are all over. So this demonstrates how our businesses are. And even if you're in employment, perhaps you only have one source of income, you have one inlet, and you have so many other outlets. It is healthy to have inlets, even if it is one, but it needs to be very huge, because as we see, outlets are normally very many, and at times we poke them ourselves by the way we do our business, by the way we live our life, by the way we plan our finances. And so cash flow is total amount of cash that flows into your business, also known as inflows, and also flows out of your business, also known as outflows. Inflows are like maybe you've made a sale, that is, you gotten some money, that is inflow. Yeah, I hope we are still together. You can see, yeah. So I was saying cash outflows are payments that you make out of your business. Maybe you owe somebody money. Those are your creditors. It could be a bank, you are paying a loan and you are making that payment. Those are outflows. So outflows, think about it as the cash that actually gets out of the business, and inflows is the cash that actually gets into your business. These do not include your debtors or your creditors. Debtors are those who owe you money. So if you sold to somebody and they didn't pay 100%, maybe they gave you 50%, only 50% becomes your cash flow. The other 50% is not part of your cash flow. It will become cash flow the day they pay you. Same to creditors. The day you return the loan that somebody has given you is when it will be outflow. Before you return it, you cannot say that is your outflow. Then this can be positive, this can be negative. It's okay, even if it is negative. A positive scenario is more preferred. However, even if it is negative, but you understand the reason why your cash flow is negative and you have mitigants, then that is still very much fine for your business. So what happens if your business runs out of cash? Maybe we can think about what happens in the case of Nakumat. Yeah. And we saw people, the company actually got dissolved because it cannot operate as a going concern anymore. It cannot keep on doing business. Yeah, there were legal issues. There are suppliers running to court. There are also creditors. These are the bankers or the people who gave their money as investors. They are running to the court. They want to be paid. There's loss of jobs. People who are employed there lost their jobs, loss of income for even the founders themselves, the directors, the owners of the business. And we even saw family feuds. You know, now family, brothers, sisters starting to fight each other. At times, it goes to the extent where it can even cause death because people are in depression, there's stress. So there are so many bad things that can happen, and we don't want to reach this level. And that is why we are discussing how then can we avoid reaching this level. So there's some concept that I would like to bring to your attention. I know so many of you perhaps have come across it, know about it, and this is cash flow cycle. What is cash flow cycle? This is the time it takes you from the time you are using your money, maybe to secure raw materials, you are in a hotel business, you are buying vegetables, and then you'll cook them, you'll sell before you are given money. When you sell, perhaps you are not even given money immediately. You are selling to somebody who is employed, who is waiting for the salary before they pay you. So the time it takes you to, when you are using the cash, to the time you are going to be receiving the cash, that is your cash flow cycle. And we can maybe just use a demonstration. Imagine, okay, let's take an example of a friend of mine who is assembling bikes. So this friend will go to China and acquire the raw materials, the parts of these bikes. So there's cash there, and then the Chinese supplier says, you have to pay me upfront because I have to manufacture and then I have to ship, and I don't really trust you. So my friend, let's call my friend here Juma. So Juma will send the cash to China, and then Chinese supplier will take 2 months to manufacture these parts, put them together and ship them. So Juma will receive raw materials after 2 months. Then these raw materials, he'll start making the bikes. So he takes like 2 weeks, and then he's able to reach the skeleton of the bike. That is work in progress. This is something that still cannot be sold. Then he continues to make the bike, maybe another 2 weeks again, and then he has his finished goods. Now, finished goods, he starts marketing. He goes to social media, he has billboards there, he's selling his bikes. So he takes another 1 month doing these activities so that he can get customers buying his bikes. So between finished goods to when he's actually making a sale is another 1 month. Then when he makes the sale, he's selling to a corporate. So the corporate is not paying up in cash. The corporate says, okay, I'll pay you after 1 month because I don't have the money immediately. And he's like, it's okay, I can wait, because anyway, he doesn't have somebody who can pay in cash. Remember, when he's getting the money from the corporate customer, he has invoiced. He has not received the money, but he has invoiced. And what happens after he invoices? KRA will be expecting that after the following day, 20th, he's paying his VAT. But remember, he's not been paid. Then finally, after 1 month, he gets his cash. So if you look at this whole cycle, it's taking Juma 5 whole months. Juma has salaries to pay every month, has rent to pay, and other several obligations. He get money to support him. So I'd like you to be thinking about what is your cash flow cycle. If you are in a services business, your cash flow cycle will be between cash, finished goods, and sales. It just oscillates between among the 3 items: cash, finished goods, and sales. So it's a bit short. Yeah, but even in services business, there are people who have challenges because of the way you do your business, maybe when you are invoicing, when you are asking customers to make a down payment. So if you consider this example of Juma, then it means that there has to be a solution for Juma to stay in business, otherwise he'll be out of business. So what are the ways that Juma can support his business? There's something called optimal funding mix. He should be able to look for a way he can fund his business in such a way that he's not out of pocket. When he needs to pay his salaries, he can still pay even as he waits to be paid. But we are going to look at various ways he can protect his business and also make this cycle short, because the shorter the cycle, the better it is for Juma. The other things that maybe I can introduce at this point is when you go to the bank, you want your funding mix, or you have your financial institution, think about an overdraft facility. An overdraft facility is something that Juma can use when he needs the money, not all the time, just when he needs the money, and the bank will be charging Juma for just that time that he's using that facility. He can use LPO. Many of us, know about LPO. So if the corporate is giving Juma LPOs, he can get LPO line from the bank. And LPO is not something you get today and you go to the bank and you are given money. You need to have gotten into conversations with the bank, and they have a line they have put for you, like they have allocated some cash for you to use when you need it. He can use something called invoice discounting. When he has invoiced his corporate customer, and the corporate customer is taking long and he needs to pay VAT, he can go to the bank and then say, you see, I have already invoiced and my customer has even accepted my invoice. So can you discount this invoice for me? Can you give me part of the money so that I use to pay tax? Then the remaining I can do later. There's also something called LC, letters of credit. If the Chinese supplier does not trust Juma, the Chinese supplier can trust his bank in China. And the bank here, Juma's bank here in Kenya, can also trust Juma because they've done business together. So these banks can speak to each other, and then the bank in China will give, some confidence or some guarantee to the supplier, telling them that if Juma doesn't pay you, we will be there to pay you. So these are some of the instruments that Juma can use, and there are also guarantees. Juma can go and get a guarantee from the bank so that he can get advance payment, for example. And this will help him to unlock the cash for the business. And there are many other ways. There is even something called hedging. You can hedge. Imagine our businesses that are, let's say, in flower farming. They will ship their flowers, but perhaps they are not paid immediately. So they have to hedge because the rates are also changing, and you don't want to, by the time you are being paid, the currency is against you. So those are just a few of the ways that Juma can sort out his challenges. What I would like us to talk about now is the cash flow challenges and solutions. And these are more of reasons why people get into these challenges and solutions that we can consider. There are a number of them. Lack of planning. Do you have records? At bare minimum, you should have a P&L, profit and loss. You can you should have a balance sheet. You should have cash flow plan for your business. For advanced businesses, we talk about financial statements, and at times they are audited. Are you able to forecast? And we are going to see tools, or a tool that you can use to forecast your cash flows. Theft. Businesses suffer from this a lot. Most of the time it is from the staff. So staff will collude with your customers, and they will, forge your signatures. They'll go open accounts somewhere else, and they'll reroute your checks to their accounts. And staff will also even inflate the invoice value, and then when they are paid, they share with the person they are colluding with. There are so many ways theft happens in our businesses, but the question is, do you have checks and balances in place? How often do you do audits? Do you even screen them when they are getting into your business, or you just get them and you move on? Poor collection methods. How do you invoice, and when do you invoice? So for services business, let's say like for us, we do team building. When are we supposed to be invoicing our customer? Is it the time when we have already provided the team building service, or before? So if you are able to invoice in good time, then you'll be paid in good time. What are do you have multiple ways customers can pay you? What are the policies around payments, how you receive them? What systems do you have in place? At times, you will find that your collection methods are very poor, and that is why you are struggling with the collection of your cash. Today, people are talking about factoring. Factoring is not very traditional. It is in very developed economies. It is where you take your data book. So let's say all your debtors, there are 50 of them, and they owe you 1 million. You can sell it to somebody so that when they follow up on these debtors, they can give you maybe 800,000 and they take a cut of 200,000. Here, locally, we talk about debt collection. We've seen even big companies like even Help today are using debt collectors to collect debt. What are you using in your organization to collect debt that you are unable to collect? What about stock management? It could be poor stock management that is making you struggle. I have a friend, he is in pharmacy business. When he gets his stock, he doesn't, record that stock anywhere. So he'll not even know, like, by the beginning of this week, how much stock he has, because everything is jumbled together. He doesn't put them in the system. He has a system, but he says he's overwhelmed. He doesn't have time to do the stock management. So you'll find when people need your stock to buy, you don't have, you've run out of stock. When you are supposed to, when it is high peak, probably you don't have stock on. Maybe that is when it is low peak, that is when you have a lot of stock. When it is high peak, you have very low stock because you are not optimally managing your stock. How do you produce? If you are in a hotel business, you will not prepare very many mandazis today, let's say for a whole week. You'll only prepare for 1 day or 2 days. Then if that is the case, how comes when you are making, let's say, clothes, you will make so many of them, or you are making uniforms, you make so many of them, and then you start struggling because you're struggling with theft, you're struggling with where to keep it, you are struggling with, how to bring in CCTV and insurance so that when it burns by mistake, you can be paid. We should be able to find out what is our optimal production level and keep to that. The other one is too much debt. So many people have gone to Shylocks. Shylocks will be charging you something from 20 to even 50% or even above that per annum for the amount of money you take. I once was mentoring a lady who was, she was sinking in Shylock debt. She's gone to the bank, she's taken a loan, and she has other 3 Shylocks that she's taken a loan from. So she was struggling like over 2 years. She's just been paying principal, but not the interest. Why? Because the business cannot produce enough to pay the bank the loan and also these Shylock debts. So it is a vicious cycle of poverty and just suffering and struggling. And when you take debt, what you need to know is you are giving your margin away. If your profit was going to be 2,000, you have already taken some debt you are servicing. You'll find out that your profit now is 1,000 or even 100 shillings. So it's good to be very careful when you are taking debt, and take debt that is matched. If you want to buy a piece of land to put in your factory, go for a long-term debt. If you want to be able to pay your salaries as you wait for your corporate customer, like in the scenario of Juma, then go for a short-term funding like overdraft, like LPO, like, letters of credit, those things that we have already mentioned. What kind of assets are you buying? We say assets are those things that put money in your pocket. Do you have things that are actually taking money out of your pocket and you're using debt to get them? So think about that. What about your character? You are issuing, bounced checks. You are also diverting funds. You are given money. This is overdraft facility or it is LPO. Instead of using it to service that contract, you have appetite to go buy a piece of land and develop, some real estate. So those are some of the things you need to check. Insufficient profit margins. This will arise because you don't know how to cost. I once was mentoring a business lady. She runs a restaurant. these fast food restaurants, and she was doing a very good business. The business is busy all the time. And she told me, Edna, I wake up at 5 a.m. I'm already at work. And we work as late as 10 p.m. or 11 p.m. And they are customers. But we don't see this money. When we need to pay for rent, there's no money. When we need to pay for, this and this, there's no money. What is the problem? So I asked her, let's take like chips alone, the fries. How much cooking oil do you use? How much, charcoal or whatever kind of fuel, gas or electricity? She didn't have an idea because she's doing so many things. She's making so many things. She doesn't have an idea how much am I putting into fries alone? How much am I getting? Am I even making profit? So many people are going out here just, throwing money out of the window because you are working very hard, but you are not making any money. You're just working for other people. So check on your costing. Also check on your sales. If sales are low, you definitely struggle. So look for various ways you are going to improve your sales. And if you can have several revenue streams, the better. If you are in a cloth making business, you can always start another revenue stream of teaching people how to make those clothes. The other one is seasonal demand. You are in tourism. Maybe your focus or target market is parents. When schools close is when you'll get a lot of business. What happens when schools are on? Yeah. So do you have some cash reserves that you can use? Do you have maybe some overdraft facility? Do you have somebody who can come through for you? Do you have money you have put in short-term instruments, investment instruments like maybe unit trust, liquid instruments that you can actually liquidate immediately if you needed that fund? Also get holistic funding solutions, and this is what I spoke about. Have optimal funding mix. Yeah. Overtrading. What is overtrading? Overtrading in simple terms is when you chew more than you can swallow. So you are in a school uniform business. You supply uniforms, you make them supply. But you have this high school, they have asked you for school uniforms, you've picked that. Then you have also this one you've picked, but you don't have money to actually do the business and do it well and provide these products in good time so that you can be paid. So if you are over trading, try to think of how you can use your resources effectively and efficiently so that they are not so much stretched, and avoid that. Check on your risk appetite. Are you this person who always look for business, but you don't have the capacity to deliver on that business? It will end up tarnishing your name and you'll be out of business. And even as you overtrade, you may find that you put a lot of money in assets. So you have purchased sewing machines. You are in the uniform making business, so you sewing machines, buttonholes, because you feel like if you do this, then you'll be able to do business better. Some of these things you can actually even lease them. You don't have to buy all the equipments in your business. High overhead expenses. Yeah, at times it is the salaries that we are paying, the kind of rent we are paying. So think about your suppliers. Is there a way you can negotiate with them so that they can give you better terms? Even your creditors, your bank. At times you can ask for moratorium. You need to pay it a VAT. You haven't paid VAT, but you need also to pay a loan. You can talk to your financier and tell them, let me stop paying the loan this month so that I can pay my VAT. And that will work for you. There's somebody I've interacted with. I was also mentoring. She's in hardware. She sells hardware stuff. So I was telling her, to increase your sales, maybe we should consider discounts, offering discounts to your customers, because she was complaining that the competition is stiff and the competitors are also selling the same thing she's selling. So I said, why don't we consider discount? And she's like, I am not able to do that. I've already given them discounts. So I asked her, how do you source for your materials? She says, in a month, I will source for them 4 times, as in every week I source for my materials. So she'll go to Gikomba where she sources for her, the boards and the rest of the stuff. And she will use a pickup, and she will pay for transport. So she pays transport 4 times in a month. And I was like, what if you are able to pay just once a month? Because you already know that you are able to sell 4 pickups in a month. What if you can get a lorry to bring them once? And she was talking about, I don't have the financing. So this is where you plan, you go to the bank, you tell them, oh, this is how my business is. And if I'm able to be facilitated, then it means that I'll be able to reduce my cost, and which I can then pass to the benefit to my customers and increase my sales. Now, those are some of the pitfalls and ways of managing them. We cannot exhaust because of time. Yeah, but what is the importance of planning? We have already alluded to that. It helps you exploit market conditions. I had a customer when I was in the bank, and this customer is into the hygiene products. So and they manufacture. So which means they have to import a lot of stuff. And when they import, and you can imagine where the dollar rate is today, you can imagine the amount of money they end up using. So what this customer used to do was, when the dollar is doing very well, they buy a lot of dollar and keep, because they know they'll definitely need it and they're going to use it. So that is exploiting market conditions. It can also help you reduce your costs and also identify gaps and take advantage of discounts as well. When you have a lot of stock, one of the ways of managing the stock is giving people discounts. You can say, if you buy today, if you buy my bread today, and you buy 5 crates, I can give you a discount of 10%. So people will come and buy because they're getting something. So that means that even you, when you have cash, it empowers you to be able to take advantage of discounts from suppliers. It also helps you create and maintain goodwill with your suppliers, with your creditors, the bank and financiers, and also your staff. No staff wants to be paid late because your customer had not paid you. They want to be paid. If you had agreed it was 30th, then it is 30th on the dot, they have their money. Yeah. It will help you evaluate your performance. You know whether you are growing or you are, stagnating, or things are improving. It will help you monitor your progress, more or less the same thing, and maintain solvency status. Solvency is the ability to operate your business as a going concern. Like, you can always operate your business this year and next year without dissolving or without your business dying. It will help you secure loans easily, and not just loans from financial institutions. It can also help you secure loans from other financial partners. It could be the grants. It could be, angel investors. It could be like your relatives can give you money because you are able to demonstrate to them what kind of business you do and where it is going and the challenges that you have. So I'd like us to look at how then do you start doing this? How would you forecast your cash flow? How would you know that next year I'm likely to have an issue with my cash, so that you can go to the bank today and start discussing with them how they can support you? And there are just these 5 variables we'll be talking about. Your total cash in, cash out, net cash flow, which is cash in minus cash out, and which we said can be negative or positive, and it's neither here nor there, as long as you understand why it is positive or negative. We have opening cash balance and we have closing cash balance. So this is a practical example of a cash flow plan. This is someone who is in the business of, now which business do we use here? I'm trying to think about a business. Yeah, let's talk of a service business. This can be products or service business. So let's talk about somebody who is in events business. So you are in events, you go book hotels, and then people have their birthdays or weddings. You help them in that kind of scenario. you are planning to start your business. Yeah, this is dated January 2022, but let's say this is for 2024 to January to June 2024. You are getting into the business and you want to start planning your cash flow, how it will be. So you'll come here and tell yourself, there's cash in. These are the total cash that will come in the month of January, February, just like that. And there'll be cash out, cash that will go out. And then there'll be net cash flow, which is cash getting in and cash getting out. Then there'll be opening cash balance. This is the previous month's or your starting position. Yeah, so this will be December 2023. How will you start? And then closing balance is the net cash flow plus opening cash balance. Where by the end of the day, January, where will you be? So we've said we are in events business and we are starting next year. And let's say today it is 31st of December, 2023. So you will come here and tell yourself, I think I know people who have children, they love doing birthdays in hotels. I also have people like Edna, they take their plans for team building and I know they'll need venue. I can help them to plan this. So you tell yourself, I'll start in January. So January, because I'm starting, I may not have any income. Then come February, I will have 150,000 because I know I'm going to have 10 clients. I've already spoken with them and they're happy about my idea and what I am going to do. Maybe you've been in employment, so you've been sorting them out. Now you have a clientele to work with. So you can project your cash sales. And because some of these customers, you are going to give them favorable payment terms, they don't have to pay everything up front. Some of them will pay maybe 30% and then 60% later. Or, in consultancy, some people do 60% and then 40%. Some people do 40%, then 30%, then 30%. So depending on how you have agreed with them, there are people who will be paying you. So this customer who pays you 50,000 or a number of customers, maybe they consumed your product in February or January. So if, let's say it was in January, you have given them maybe 2 months payment plan. So they can pay part of it after 2 months, and that is why they are paying you in March. And remember, there are some who will come in February, they'll pay you in April. Yeah, so that is why you have cash sales and you have receivables. Then you have rent, you have multiple income streams. So you also have some tenants somewhere, Airbnb, and you are getting 30,000 per month. Then you have a loan. You have decided, I'll go to my friend or my mom and dad, I'll tell them to give me 400,000 to start this business. Yeah, and I'll be able to pay them after a while. And they've agreed. So you know you are starting with 400,000. And then you have other, these are maybe gifts from friends, and they are happy about what you are doing and they are just giving you the money. So your total cash in, you are able to project it for 50,000, 180,000 to 80,000. Then you come to cash outs. What will be my cash purchases? Yeah, I'm going to get into maybe a contract with some venues. They'll need me to pay some deposit, just like a guarantee. So I'll have a significant outlay during the first month, 520,000. This will go into securing those venues, or maybe buying equipment that I'm going to be using, you'll be using in your business. Then you have payables. Payables are your creditors, people you owe money. So some people have given you something, some people gave you equipment or materials you are using in your events business, and you are paying them later. And this is how you project. And you have utilities, you have some salaries you'll be paying, and you have maybe phone calls, some fuel for your car, you put them there. Then you have your principal repayment. So if this loan, you are going to pay it every month, then you have to put it there. Yeah, because every month you'll need to give money back to the owner, and you also have your interest. So total cash out becomes 593 to 53,000 and the rest. Now, if you look at the net position, which means the money that will be coming in minus the money that will be coming out, you have a negative minus 143,000, minus 73,000. It is during the 4th month that you start seeing some positive position, you see. But these other 3 months, you are at negative. So what happens when you are at negative and you don't have any facility, you don't have a plan B? Then it means you will not be able to start that business. You have also told yourself, I have my savings, so I'll start in December 31st, 2023. I have 110,000, which are my savings, and this is what I'm going to start with. So if you even add this to your position net cash flow, you are still at a negative minus 33,000. So what does that mean? Does it mean you should stop starting that business? Not necessarily. You can always have a plan, maybe an overdraft facility that will help you during this time when you are at negative position till you'll be at a positive situation. Just to share with you maybe an effect of when you negotiate with your creditors. This is the same thing we have looked at on the other side, and you can see we are at negative position for some time, negative 33,000. So assuming if you have another overdraft facility, it will help you. Now, if this loan that you took, you are able to negotiate and say, why can't I pay you during the 6th month? Give me some leeway, give me a moratorium or a payment holiday. I'll be able to pay you after 6 months, so that instead of paying you every month, I can use this money to just build my business. Now, the difference you are going to see between this table and this is the effect of being able to negotiate the loan payment. And that is what you are seeing under net cash flow. So on this other scenario, you only have 1 month when you are out of pocket, and the 2nd month. The rest of the months, you are very much okay. And why is that so? Because you are able to negotiate a moratorium here. So instead of returning your 70,000 every month, you return the principal at the end of the 6th month plus the interest, and you can breathe. You don't really have to have an overdraft facility because you are taken care of. So as a summary, you need to look at ways to reduce your costs. Reduce your costs. And if you don't have to put somebody in payroll, if you can use, virtual assistant, for example, because you'll be paying pay as you earn, that is. And research also shows that most employees, not the ones that are here, just relax in the office. Their productivity is normally not at 100%, most of them. Yeah. Increase your income. Have multiple sources of income, and have a way of generating additional income if you do not have it today. There are so many ways you can do that, and we can always discuss. Effectively manage your surplus. When that customer has just paid you, you supplied your uniforms, or you did this consultancy job and you got paid, and job will not come every month, especially in consultancy. Have a way of managing this surplus. Don't just go and put all of it in a house you are building. Yes, the house is good, but your business also needs to survive. So find a way of managing it so that it can cushion you during the time when you do not have cash. And that also means that you will not use expensive cash, and you will not be sharing your margin with other people like the bankers. Engage your financial partner for holistic solutions. I've already mentioned this. There's no one shoe fits all, and also there's no one solution from your financier that is going to sort out all your problems. You need to have multiple solutions from your bank. Seek help. Could it be a grant you need? Could it be, you need somebody to partner with you as in bring equity into your business? Maybe you need to talk to another friend. You do the business together. They can help you with that part of the capital. So I think at this point, maybe we can now open it to share experiences, questions, and comments. Those are our contacts. Feel free to reach out. Thank you.
Thank you so much, Edna. It's always good and inspiring to sit down and listen to your knowledge and expertise in the financial field. There are some questions that has been sampled out for you to help us with. Team, let's continue to put down the questions on the chat session so that our speaker can handle them, because we don't have much time. So if I can read for you. We can read for you the questions here. The first one was from Dr. Melvin. He's asking, what is your advice on cash flow focusing for a startup in the first year of operation? Was that clear?
Yes, yes. Thank you, Dr. Melvin. The first year of operation for a startup, just use a cash flow plan to help you to trigger your thinking, thought process. Ask yourself, where will my cash come from? Where will my cash go to? And if this is my net position and it is negative, how am I going to take care of it? How am I going to tackle it? For startups, you can think about starting small and making your organization very lean, because no one wants to also risk their money in a startup. Remember, if today you go to the bank as a startup, you want to start Uber business, and then you tell the bank, I need to buy a car of worth 1 million. I'm a startup and I have passion, I know, and I'm a good driver, I've been driving. Not many people are going to give you their money, because if anything happens to you, or maybe, you know, on this other side is because you didn't have a job, now you have a job, you are going to abandon that car and you go for greener pastures. Who will lose is the person who funded you. And if you didn't have your skin in the game, then it means they are the ones taking the full risk. And no one wants to take the full risk. They want you to be able to demonstrate that you can put something in the game. And maybe you don't have money to demonstrate. So the best way is start small and be able to demonstrate to somebody that I have been able to, you know, partner with my two friends, and we have raised 300,000. Now we are looking at 700,000. Somebody can buy that easily. So start small, keep it lean, and use that template to be able to, you know, forecast how your cash flows are supposed to be and help you to think through it as well. Let me hope that
Thank you very much. Yeah, I trust Dr. Melvin, you've been answered. In case it's not clear, you can still put down another question on the same. We have another question from Benedict Wairimo, and she would like to know, how do we achieve competitive pricing in sectors where the market is already flooded, like you are many service providers of a certain product or service?
Thank you, Wairimo. That is a very valid question. Unfortunately, there's no place where there's no competition. Yeah, in several of our businesses, there's stiff competition, but they still need to have a competitive edge. So I think it would be good to ask yourself, what is unique? What is your unique selling point? Why should people come to you and not go to them? If you look at the financial institutions like the banks, NCBA is doing very well. ABSA is doing Equity is doing very well. So why would you go to Equity and not Corp, for example? At times, it is just the customer service. They go an extra mile. It could be the, you know, education they provide, non-financial solutions that they are providing to their customers. Maybe they are training them, they are exposing them to opportunities. They take them to China to go and see the suppliers there. So that is what will make somebody go to, probably, I'm not saying now Equity is better, but go to one financial institution vis-a-vis the other one. So it's good to ask yourself, what is it? What's the value add you are giving to the customer? There's the need there that you're already sorting out, and all of those other competitors are also sorting out that need. But what additional thing can you put? And you remember the example I gave of the lady in the hardware business. She's facing stiff competition, she's already given discount. Maybe if somebody comes for 1 kg of nails, it is costing 300 shillings. She can only give 20 bob discount, because if she gives more than that, then she doesn't make anything at all. But we have seen that if she's able to efficiently manage how she acquires these raw materials, bring down her transport cost. Instead of going to Gikomba 4 times in a month, she goes only once in a month. And then she's able to sell and save on transport cost for those 3 additional trips. Then this is something that she can put back as a benefit to the customers in terms of discounts. So ask yourself, what are some of the things that you can twist in your business to be able to gain that competitive advantage? It could be the payment terms that you are giving them that the competition is not giving them. Yeah, it could be your customer service. It could be some other services. You go and train their staff for free on how to use your products or how they can better their lives. Yeah, and I know people have ideas here as well. So if time will allow, I think other people will be also able to share their thoughts. Yeah, we can go to the next question in the interest of time.
Thank you very much. I can see Lois is thanking you for the rich presentation, and Dr. Edda Pia is saying thank you for the great presentation. We have Anthony's hand up. Kindly unmute and speak.
Thank you so much, Edna, for the wonderful presentation. And I've really learned a lot, like also the other people have said. Now, I'm just wondering, when it comes to pricing, do we have a formula for pricing? Because I know even pricing is also a key determinant of cash flow and how money flows into a business. Is there a standard way of pricing items? Just wondering. Thank you.
Thanks, Anthony. Yes, very good question. Is there a standard way to approach pricing? If you have many competitors in the field, then you may need to use a blended way of approach to your marketing strategy. Because if you are, for example, in a wholesale business, you have bought your sugar, 1 sack of sugar at, let's say, 500,000. I don't know the real cost of sugar, but just as an example, 500,000, and your competitors are selling it at 510,000. Yeah. And for you, you wanted a profit margin of maybe 20,000. You may not be able to put your pricing at 520 because everyone will go to the 510,000. So, but the best way to approach it is first look at your costs. What are your fixed costs? What are your variable costs? And then that is, if your total cost is, let me give you an example. Let's say you are in, and also the type of business will determine that. Some people are in manufacturing business, some people are in a retail business, some people are in services business. So let's say, take for an example, I know you are in a retail or distribution business. So you buy your bread at 50 shillings, for example. You cannot sell this bread at 50 because you have labor there, you have rent, you have electricity. So your direct cost could be the person you have employed to sell this bread for you. So let's say in a month you are paying this person X amount. And if you divide it into days, you are paying this person 100 shillings per day, maybe 3,000 per month, so 1,000 per day. So your direct cost that goes into this sale of bread is already 100 divided by the number of pieces of bread or loaves of bread you are going to sell. So let's say you are only, there are crates you are selling and you are selling 10 crates. So which means per crate you are paying this person 10 bob. So your direct cost, your raw material, you have gotten it at 50 bob. Then your direct cost is 10 bob. Then now you are also paying rent where this bread is being sold. and maybe there's electricity, maybe, you know, there are other things, there's insurance. So if you divide all this amount of money, it is why Kenya shillings, and you want to divide it per day for the bread that you are distributing, let's say it's 5 shillings. So your total cost is 10, the direct one, plus 5 indirect costs. You have 15 shillings there, plus amount of money you have used to buy the bread to sell. So your bread is already costing 65 shillings. If you sell it at 65 shillings, you have zero profit. So you need to sell it from at 66 bob to maybe 100 bob to be able to get your profit. So first, make sure that you understand your total cost that goes in, and then put in a margin. And then factor competition. What are they charging their clients? If you're in manufacturing, there's a totally different approach, because you have overhead costs, you have variable costs, you have many other things to think about, but there's always a formula that you can use. The other thing is to look at what other people are doing, talk to them, and they'll give you insights into how they are arriving at their costs. Especially in consultancy, you may not be aware, but if you share with other people, they'll tell you the approach that they have and what has worked for them, and you can also try that.
Thank you so much. I trust we've been answered. I can see Patrick is giving his contribution on the same. Where has it gone? Patrick is saying for pricing, there are a number of ways to consider. Your cost of production plus a profit margin, the equilibrium market price of similar items in the market, what the customers are optimally willing to pay. I trust, Edna, you can relate with that. Do you have anything to add on that?
Yes, that is true. Use also the market. There are formulas that are already out here. You can always Google them. And if you are, some of them may not be very easy to understand if you are new in this field. For example, you are making, you know, leather bags. There's so much that goes into that, but there are already templates that are out here that you can just fill in your stuff as long as you know this stuff. And if you do record keeping, is what will help you know the figure to put where. But other than that, we are in business development services. So we provide coaching, mentorship, business advisory, training, and feel free to reach out if you'd want us to explore ways we can work together, or if you have additional questions, which probably we may not be able to respond to here, feel free to reach out and we'll be happy to discuss further.
Thank you very much. For the interest of time, these recordings are always shared, so you can go back to them on the YouTube channel and catch up with whatever you might have missed. Let's welcome Dr. Melvin to give us a vote of thanks and a summary. Karibu sana daktari.
I want to thank all the participants for being present today for this very informative webinar. I want to thank Antonia and Otieno Paul Peter in the background for keeping us on track and for managing the chat room, as well as doing all the behind the scenes technical support that we need to keep this Power Monday sessions going on every Monday. And finally, I want to thank Edna for not disappointing us. In fact, she has managed to educate us to the point of a slight overload. But we expected nothing less from her because of her experience in the banking sector, because of her experience as a mentor, and because of her experience with business women and men who are not just in the micro and small and medium enterprise space, but even in large manufacturing and consultancy business. We are so educated. My take home today, besides reducing costs, increasing income, and effectively managing surplus and engaging financial partners for holistic solutions is to seek help. And I think Edna is ready and willing to help anybody on this call who needs the kind of help that she is ready to provide in terms of cash flow projections, cash flow management, and ensuring that cash is coming in and going out in a very orderly fashion. My personal take home from today was the template, the cash flow projection template, which with her permission, I will use in other spaces. So thank you so much, Edna. We can't have enough of you. And I'm just hoping that you will come back here another day and enlighten us some more. And we're going to take your offer of being available to answer any other questions we have or to engage with you at a deeper level very seriously. And I want to speak a blessing to you. I want to speak a blessing to Power Monday, and I want to speak a blessing to all the participants in this particular session. Back to you, Antonio.